Okay, welcome to the Polaris Trading Group's PTG University Educational Series. Today's Monday, December 8, 2014, and what I'd like to do today is review today's trade session, beginning with our daily trade strategy report, which we send out to our members pre-opening, and then review that as it relates to how the market unfolded today. One of our scenarios today, scenario 2, worked out perfectly today, right pretty much down to the tick, and we had a great trading session. So what I'd like to do is review that and to give you guys a sampling of what we do on a day-to-day basis. Alright, so before we do, I'd like to just state that trading in options and options on futures is speculative in nature and involves substantial risk, and past performance is not indicative of future results, and the commentaries herein on this video are educational in nature and designed to contribute to your general understanding of financial markets. So let's get to first off the daily trade strategy report, which we send out to our members prior to the opening. Okay, so on your screen you should see the daily trade strategy as of the 12/8/14, and I wrote this morning, and this is a report that we send out to all our members prior to the market open. This is written early in the morning, and it is basically sets us up as our daily trade plan, our assumptions for the day. We use a scenario basis hypothesis. Scenario 1 is typically a bullish scenario, and scenario 2 is a bearish scenario. And I simply outline what we anticipate for the day to bring. And so, since this is a Monday, I generally make a small commentary regarding the prior week's action. And as you can see here, what I wrote simply was, despite making an all-time high last week and expending lots of buy-side energy, absorbing overhead supply, on a week-to-week basis the price did not make much progress. And so I noted here that this could be a tell that sellers are beginning to increase in greater quantity and making latecomer buyers potentially trapped near the recent market highs. All right, and what I was also mentioning that a break of the 2060s would be a potential harbinging of lower prices, pushing price potentially down to the 2045s. Now today was a cycle day 1, and we use a 3-day cycle, and we'll be doing a video on the 3-day cycle at another point.
Yes,
but simply the expectation for today was for weakness and to probe for lower for a new secure low. Now we handicapped some of these odds, and I note in here that the odds of favor to decline of greater than 10 handles by 71%. So we knew we had very, very good odds today of a decline. In pre-opening, the market had already been down 7.5 handles. So what I continue to do is that I outline the odds for this session. So odds of a decline greater than 10, 71%. Odds of a decline greater than 20 handles, we handicapped at 41%. And the average range on cycle day 1 is 18 and 75 handles. The max range was 21 and 3/4 handles, and you'll see shortly that actually that came into play very nicely. We projected the possible high if there was a bullish scenario up at the 85, 87 zone, and if the bearish scenario played out, which is scenario 2, possible low was down at 2057.75. What actually got hit, and I believe the low of the day today was 2053.75. All right, but the actual max range for the day played out even better. So then I simply I lay out the scenario 1, scenario 2, and what I want to focus on today simply is scenario 2, because that's the one that really played out. And again, the expectation was for a probe lower on cycle day 1, and I simply wanted to say, should this develop, the odds initially favored 2069, which was our 10 handle rule, followed by 2066, and then down to 6450. The key there was failure to find responsive buyers, all right, in sufficient quantity. Simply was our expectation was to probe lower, and down to the extreme downside low to be mindful of was 6150, and down to a potential projection low of 5775. All those levels did get hit and more today. All right. So what we want to do is we're going to take a look at the charts and see how that unfolded. But what I want you to keep in mind is that 2175 max range, all right, average range on the cycle day one. All right. So let's get to the charts and do a quick review. Okay, so the charts that we use in the room, this is one of them. This is a 1500 tick chart, and it gives us our swing values and everything that we need to evaluate how the market is unfolding. And I will mark the opening here of the day, which was about this price here, about the 2067s. Okay, and then early, right off the opening, again, the overnight inventory was short. All right, price had pushed down from Friday's close, and we got a bounce here on the opening. So we waited for that bounce, all right, to unfold. While we were live in the trading room, we were talking about that the 3-day central pivot zone would be between 73 and 74 would act as some resistance. So let me put that zone on so you have some reference point. Okay, so I added the 3-day central pivot zone here, and this is an important zone for us as part of our methodology. And you can see as price rotated up to the 73-74 zone, you can simply see that the clustering of the volume here that took place, okay, occurred right around that 3-day central pivot zone. All right, so price was unable to make further progress above the 74, 75 handle. All right, so simply the 75 handle here, and at this point right in here. Okay, now, although it was going sideways and it appeared to be bullish initially on the opening, price was above our ATR line, but it was not making any further progress. So looking a little bit underneath the surface here, not just looking at bar charts, but looking at the order flow becomes very critical to determine whether or not there would be further upside potential tests to the session high. 2072s we had marked as dotted line live in our trading room as pretty much a key over-under number, all right, in order to hold. Violation of that, which ultimately you can see that in fact did happen, was key. But what I want to highlight here is what happened in this particular zone right in here prior to the violation and breakdown by looking at the order flow. So let me put that order flow chart up. Okay, on this particular chart, this is the Sierra Charts version of the imbalance chart number bars, and it's very similar to just a simple delta footprint style chart. And but we call this the imbalance chart, and simply what we're looking at here is the difference between what is traded on the bid side of the market and what is traded on the offering side of the market. And when the bars display, or the prices display green, that means prices are trading at 200% on the offering side versus the bid side. And again, that is measured diagonally, read diagonally, just like you would on the order flow dome. And when it is red numbers versus gray numbers, or red numbers versus green numbers, when we have red numbers, that simply means that there is more, 200% more being traded on the bid side of the market. So that can tell us how the market's action is unfolding here, the aggressiveness And there's a concept referred to as effort versus result. How much effort is being applied, and what's the resultant factor of that effort? So we begin here as price came up off the opening. All right, this is about 10 o'clock here on the left-hand side, and as you can see, there was I highlighted some balances between buyers and sellers back into this range, and you can notice this magenta area here. This is our 3-day central pivot zone that I mentioned a short time ago, and you can simply see that the market was oscillating back and forth here. Okay, we had a buy signal here at the 73s, which played out up to about the 75s, two-handle rotation. Okay, and what was really of interest, all right, was that as price ultimately rotated up to the 75 handle here, prices balanced off. You can see a fair amount of balance in here, but I've noticed that, and I've marked some of the down arrows, which are indicating to us that the sellers are beginning to get more aggressive here. So you can see 9,000 contracts sold on the bid versus 5,000 paid the offering. Now again, there is some balance here, all right, at this price point. There's certainly a high volume zone, but the key part of this was the fact that price was not making any further upside advancement. All right, one thing I like to look at when I take a look at the imbalance chart is relative action on the offering side versus bid, and question is price making further progress to the upside or to the downside. In this particular scenario today, price was having difficulty sustaining a bid above that 74.75 area, and as we move along, just click along to the right here, okay, we can see that price pulled back down into that 3-day central pivot zone. There was some aggressive selling that took place down here. Again, responsive buyers, and then they pushed it back up a bit. But then notice that price was not able to get back above that 75, that 2075. And we had highlighted this for our members live in our trading room, that 2075 was a key marker. And then simply the buyers dried up. Again, you can see on the offering side of the market there was just very little buying as opposed to selling that came in on the bid side. So that caused yet an imbalance. But if you take a look at this over the range of bars here, there was a lot more heavier selling and aggressive selling on the bid side versus the offering side of the market. So the market started weakening here. Also at the same time, the market internals showed a lot of weakness. So let me pull that market internals chart in, and let me show you how we read that. Okay, so here's a market internals chart that we're looking at, and what we look at here is simply the New York Stock Exchange tick on the top, and then we have the advanced decline ratio for the New York Stock Exchange, NASDAQ, and Russell. And as you can see here, on the left hand side where I have the arrows now in the vertical line, now I had placed these arrows there live with our trading room, and I had mentioned that at this point market was getting weaker. There was a tell. We had some lower tick readings, and the market simply had shifted. The advanced decline ratios of the three major indexes that we look at here were definitely shifting to the downside. So this was a caution note for us at 11:26 a.m. Eastern Time to be watchful for potential shorting opportunities rather than new long opportunities. And again, knowing from the daily trade strategy that today we had good odds for lower levels, and in terms of 71% for at least 10 handles down and greater, we were on the alert for looking for shorting opportunities today. Let's take a look further at some of the charts, see how it unfolded. Okay, back to the imbalance chart here. As I was mentioned just a moment ago, we were seeing an imbalance to the sell side, and prior to the breakdown, and again, you could still see further evidence, all right, of selling coming in here. And then this bar right here was really the key. Okay, this one right here. And the reason for that is there was very little buying on the offering side of the market, and there was aggressive selling on the bid side. All right. So this was an extreme. Although the market had been in balance here at the 3-day central pivot, this was the bar that really made the difference. And then the confirming bar right here at the 72s, more selling came in aggressively, and as you can see on the offering side of the market, there was very, very little buying. Okay, so on a, and again, this is all part of what we look at. The market internals were getting negative, and so we were looking for entry opportunities, and we were mentioning that a break of the 2072s would usher in a potential, whoosh to the downside. All right, a flush to the downside. All the professionals out there were marking and keying off of 2072s, and you can simply see here on the breakdown, okay, of those 2072s, the market just began to collapse very aggressively. All right, so these are some of the tools that we use to determine, when to get into a trade. Now, a break of the 72s was our trigger, all right, to get in short. So this was simply a short breakdown trigger from a key location. Let's go back to the 1500 tick chart and wrap up the video. Okay, back over to the 1500 tick chart. Once we got that breakdown that we were anticipating through the 2072s, price consolidated a little bit here at the 66s. Now, 66-68 zone has been fairly important the past few days. But we did get a definitive shift, and one of our core trade setups here, one of our bread and butter type trade setups, is what we refer to as premium. And again, these signals that are generated on our charts are live, and here's the historical signal. We got one premium signal here at 68s. We got another confirming one at 2066s. All right, so the entry points here, all right, for our members was about the 2067s down to the 6550s or so against those highs. And you can see each of those entries turned out to be a very, very nice trade on the way down. And as you see, ultimately the price bottomed out at 53.75. So our expectation today was for a max range of 21 3/4 handles that has been historically observed on cycle day 1. And so as prices are moving lower, we can simply ask the question, what is today's projected low based upon an average range on cycle day 1 or a maximum range observed on cycle day 1? And since we already have those figures, which we give to our members on a day-to-day basis, we're able to simply calculate what the projected target or low for the day would be. Now, today's high here is 2077.50. Okay, so we want to simply take today's high at 2077.50 and subtract the maximum range projection of 2175, and that will give us our projected low for the session. So let me just type that on the screen here for a moment, and we'll take a look. Okay, so using our max range value that we had for today, which was 2175, if we subtract that from the current high of the day, which was at 2077.50, that gives us a 2055.75 projected low today for the session. Okay, today's actual low came in at 53.75, so 2 handles away. But again, what we simply look for is that 55.75. So there's the projected low, all right, for the day, and so we came within 2 points of that. But notice where the majority of the action did trade. There was quite a bit right around that 56 point. All right, and then 54, we also highlighted that was an important level going back several days into last week. as well. So all in all, this was an extremely good day. Starting off with our daily trade strategy, and then as the day unfolded, wanted to highlight how this all unfolded for us today. So that's it for today. If anybody is interested in taking a trial, please come visit us. All right, here's our contact information. You can reach me at david@polaristradinggroup.com if you have some questions. Come visit us at polaristradinggroup.com and sign up for a 7-day free trial to our trading room. And as a trial member, you will get access to our daily trade strategy during your trial, as well as access to our trading room where we discuss everything that you've seen here today on the video. So hope this helps. Enjoy, and good trading to all.